Greetings, everybody. Let's now look at UK100. So here's the monthly chart open, and on the monthly chart, I can see that we had an overextended W structure in that region, with the neckline being in that region. By now, you guys know that when it comes to M and W formations, ideally would love to see, in the case of W formations, price break the neckline to the top side and then come back to the neckline of that W structure, and then from there push further up. And we would look for further buying opportunities on the retracement back to the neckline of that W structure. Can you guys see that in this region we never really got to see price come back to the neckline to retest it and then push further up? So ideally what we would love to see happen is price move further down to retest this area at some point and then move further up, right? So I'm just going to add the neckline for that W structure because it is very much important, even though it seems as if price has left that zone pretty much here. So anyway, here's the neckline of that W structure, and just also keep in mind that the necklines are areas and not an actual line, right? So let's proceed. So is there anything else of interest that we see on this particular chart that we should be paying attention to? I don't see much really, except that we have this candlestick over here. It is a liquidity candlestick, and it tells us that the market in the future has to reach that point to grab that liquidity. We also have another one here. We also have another one here. It is also a liquidity candlestick, and similar to this one, it also tells us that the market has to at some point reach that level to grab that liquidity. Remember that liquidity represents money, and everywhere there's liquidity, the market needs to at some point go to that level to grab that money. We also have this candlestick over here, right? It also tells us that we have a whole lot of liquidity down there, and that in the future we will see price head down there to grab that liquidity. However, it is not really important at this point in time because it may take even years for price to retrace back to this level to grab that liquidity. Nonetheless, let's keep moving forward. I don't see anything else on this particular chart that is interesting. So what I'm gonna do now is head down to the weekly chart. So here we are on the weekly chart. On the weekly chart, we can see that the previous week's candle was a very strong bullish candle, and it indicates that price may be actually ready to move further up to at least this level, which is a very strong area of resistance. And we also have that candlestick over there, which is a liquidity candlestick, which tells us that there's a whole lot of liquidity trapped at that level, right? Another thing that is also very much interesting, let me just zoom in a bit, is the fact that we have or rather we had an M structure over here with the neckline being in this region. We saw that price broke the neckline and then went back up to retest it. However, the neckline was not really able to hold price, and we saw price move further up. And just remember, just like with W structures, when it comes to M structures, we would love to see price break the neckline to the top and then go back to the neckline to retest it. And this is where we would look for further selling opportunities, or this is where we'd look for selling opportunities, right? As this is the anticipation. But it never really happened at this point, as price broke to the upside of that neckline. Anyway, let's proceed. So over and above us having that M structure, we also have a W structure in this region. Let me just zoom in a bit, just bear with me. So we also have a W structure in this region, with this part being the second leg of that W structure, and the neckline is in this region. So we are yet to see price come back to the neckline to retest it, and should it do so from where it is, we would most likely look for possible buying opportunities. And that is also because, as I said, guys, we have a whole lot of liquidity trapped up there, and the market needs to grab that liquidity at one point or another. So what I want to do now is add the neckline of that W structure. Just bear with me, guys. There goes the neckline. In fact, let me make it a little bit wider, so we can see that this is the neckline of that W structure. And just to reiterate, necklines are not an actual line, they are rather an area, right? So that's the neckline. And remember, guys, when it comes to W formations as well, a lot of traders and investors buy on that second leg of that W structure, right? Which means that just below here we have a lot of stop losses that are trapped there, because people or investors and traders bought at this region, and others bought on the break of this neckline, also put in their stop losses just below here. So as I said, guys, we'd love to see price come back to this region to retest it and then push further up. So what I'm going to do now is utilize the Fibonacci retracement zone or Fibonacci retracement tool, just to see if that neckline aligns with any of the key numbers that we have on the Fibonacci retracement tool. So just bear with me. Let's see. Let's see. So here we are. So can you guys see that the neckline of this W structure actually aligns with the 50% Fibonacci retracement zone? So should price from where it is retrace back to this level, we would look for further buying opportunities, as this is the anticipation. And our first take profit would be this area over here, because it's a very strong area of resistance. And that is because we had a touch here, we had a touch over here, a touch over there, and a third touch over there. So this is a very strong area of resistance. So what I want to do now is actually mark that area of resistance, because it is also extremely important. Just bear with me, guys. There we go. There we go. So as I said, should price retrace back to here, we would look for further buying opportunities, and our first take profit would be this level over here, because it's a very strong area of resistance. Anyway, from here I'm just going to head down to the daily chart, and here we are on the daily chart. So what do we see on the daily chart that we should be paying attention to? Let's see. What do we see here? Let's see. What do we see? So the first thing that I'm going to do on this daily chart is add my daily channel. Let's see, how would I add my daily channel? I would do it in this manner. Just bear with me. I would add my channel in this manner. There we go. So there goes our daily channel. So can you guys see that on this daily channel, or rather on this daily chart, in regards to this channel, we had a touch here, a second touch there, and currently we have a third touch there. So what this tells us is that a whole lot of traders and investors will be looking for a sell, right? And that is because when it comes to channels, retail traders have been taught to sell on the third touch of that channel. So people will be selling on the third touch. So at this point, a lot of people are selling, and others will continue to sell, right? So as I said, guys, this actually ties in with the fact that we have this W structure that I spoke about, and I said that ideally would love to see price come back to the neckline of the W structure, and then from there push further up, right? So it ties in very nicely with that. Myself personally, I don't sell based on the touches of trend lines, but if you do sell at this point, that is, your take profit should be at least this point, and at this point you should look for further buying opportunities. And that is because we have a W structure, we have the neckline, and we have the 50% Fibonacci retracement level where that neckline is. So when price gets here, I would say look for further reasons why you should be buying, and then if it makes sense to you, I would say buy, right? Myself personally, I will buy at this point if price does exactly what I'm saying to you. And my first take profit would be this level over here, because it is a very strong area of resistance, right? I hope that makes sense. Anyway, from here we're gonna head down to the H4 chart. On the H4 chart, I'm just gonna fix my lines. Just bear with me. Let's see. Right, there we go. So is there anything else of interest that we see on this H4 chart? At this point, I don't really see much, although we do have a liquidity candlestick over there, which tells us that the market has to go down at some point to grab that liquidity. We also had a W structure here with a neckline there. We never got to see price come back to the neckline to retest it. Instead, it just kept on going up. We had another W structure over here with a neckline there. Price broke the neckline to the upside, came back to the neckline to retest it. We would have looked for further buying opportunities here, right? At this point, this would have been a very nice buy, right? So in as far as UK100 is concerned, this is my analysis, and at this point in time I would not be buying or selling. However, I do know that because of the third touch here, a lot of people will be selling, and many of them will have their take profit at this level over here, their first take profit, that is, because it's a strong level of support. Others will wait for price to get here, and that is where they will take their profit if price does come to this level, that is. If price, as I said, comes down to this level, we will be looking for further buying opportunities. So that is my analysis, and peace out.